What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the links in the description below to the Rawstocks Discord, where we currently have a promotion going on for 30 days worth of free premium on the Discord. That's where we have the premium callouts. We have a premium member chat. We have a premium book study, as well as all the other things that come along for free by joining the Rawstocks crew. Also, a link to the Traders Helping Traders Discord, where I'm also hanging out during market hours. Also, their premium membership gets my callouts as well as some of the technical analysis and other education that I offer. Also, congratulations to Fabric Softener from the Discord for winning the 500 YouTube subscriber free t-shirt. Don't forget to continue to watch the videos. As we hit 1,000 and 5,000 subscribers, we'll be giving away more Rawstocks gear, including a hoodie and a throw blanket for your couch or chair. So now let's jump into the charts. You can see on the daily chart, we have it pulled up here. We were talking about the Friday range, and we were looking for a breakout or a breakdown. Well, we got the breakout. Okay, we still have the Thursday range from the day after earnings happened, where we had that gap down between Wednesday and Thursday, and that's also an important range to see if we can break into or out of or break down from. So right now, all we've done is we've busted outside of Friday's small range day, which is a nice bullish move, but I really wanted to see us get up to liquidity that's in this candle wick high. Didn't quite get there today. We'll see if we can maybe get there tomorrow or into Wednesday. I do anticipate that we're probably going to pull into this gap somewhere, maybe even close it, and then potentially we could see another leg down from there, or we could see a rally up, and we'll talk about where those potential targets can be. But right now on the daily time frame, we got the liquidity level at 192.86, and then we got the gap fill at 206.83. So that's our short-term target. Back down, we'd be looking for a run on a test on the old low, maybe a liquidity sweep, and then we could maybe see a rally up from there. So it depends. If we start going higher and much higher, right, what are we looking for? If we head down, we're looking for an actual full move down below the low, not a liquidity sweep, and deliver down low. So we can look at what that would look like, right? If we start rallying up and we see price heading up, right, potentially to our fib levels up, right, then we might be looking for an actual nice displacement continuation to the downside. But if we don't get that and we just get this small move into the gap, maybe even up to gap fill, we easily could come down, swipe the low, not really go much lower, and then we could see a more meaningful rally back up to the upside, right? So a couple different scenarios that could play out. And maybe we just reject that gap altogether as we try to push on it tomorrow, doesn't like it, right? And then we'd be looking for potentially a deeper move down. I don't know that we're going all the way to 150 right now. I've seen people calling for, 170, 160, 150. I think we got to pop back up higher if we want to go deeper like that. So we'll be watching to see what price starts to tell us heading into the rest of the week. But that's kind of our daily time frame look. Okay, if we drop down into the 1 hour chart, the 1 hour chart starting to show some strength. If you look at the RSI, right, our RSI, we got all the way to an overbought territory on the 1 hour chart. And you can see, we popped off that bottom. We came down, we tested this order block here, and we started to rally higher. Get some nice beginning of displacement here. And you can see we're targeting that 192 86 level. As you can see already in after hours, it looks like we're up to 192.59. So we are surely going to take that liquidity, which is again where the gap fill starts on the daily time frame. Targets that we're going to want to be looking at. We're going to be looking at the return. If we rotate back down, we're going to be looking at a return to this fair value gap right there. Other than that, we got order block down here below. That's a huge wick, so I'm not really even gonna look at that order block as much. because that wick goes so high. So I'd actually be considering, if we came down, maybe down to this order block down here, if we were to come down and run a test on that. But I don't see anything. This is more or less like a lot of balanced price range. This gap here from today has already been closed. This area here has been closed. So I see everything I see looks pretty good. It looks pretty good for continuation to the upside. If we get a pullback, right, again, maybe we gap into the gap. If we get a pullback to that 190, surely take your entry, right? Because then what do we got is we got price going to be drawn back into the 1 hour, and this is inside the daily gap. But here's the 1 hour bearish fair value gap, and we're going to see that act as a magnet. We're going to see price draw into that. All of this down here, all this is relatively balanced price range. We do have one other fair value gap right here that could offer a bit of resistance. That's right at that gap fill. So maybe we pull right up to it. Maybe we pull into the consequent encroachment. Maybe we even go all the way into it, find some rejection. I bet we get it at or below consequent encroachment. Possibly see that pull back into that fair value gap here at the 190 area. That's your go sign. We're looking for that 190 if you're looking for a long entry. Other than that, if we just gap and go, we'll be looking for price to deliver up to that 202.66 all the way up to 206.78, being that 1 hour fair value gap and that gap fill level at the top. Okay, so that's our 1 hour chart. We have our targets there. If we drop down into the 15-minute chart, we can just get a better look at what happened today. Right, here's our London range that we get access to in pre-market. Right, we saw a deliver down, gap fill, and then we see displacement, small consolidation, reaccumulation. We see a corrective move down, and then we head higher from there, ultimately taking out the high. We see a PM session continuation, and then even into post-market or aftermarket hours, we see that continuation to the upside. So good signs if you're a bull that we are, at least seeing some life breathed back into Tesla. Whether we go much higher, that's still to be determined. But we are at least seeing some kind of relief rally, which has been nice. It's a nice sight to see, considering how rapidly that sell-off all occurred over the last month or so. Dropping down into the 5-minute chart, right? Just again, another better look. If you're a 5-minute chart trader, which I know some of you guys are, we can look at how we could use the elements of a trade setup to take the 5-minute trade. And what we notice is London range here. We get delivery on liquidity both up and down to run that liquidity out, run those stops out, get those orders filled, right? We see a pop up. We see a change of character, market structure shift. We get a fair value gap in that displacement candle. We'll draw our fair value gap there. We'll label it green because it's a bullish fair value gap, right? And you see we get a candle trade back down to it. Not an amazing entry. We would have loved to see price come back down a little bit further into that fair value gap, but you can, you don't always get it. So you can take that first quick entry at the return to the fair value gap, right? And then we ran it up. If you look at where our targets may have been, we have previous high, a wick high there, and then we have the gap fill level there. So you can see if you took that entry, you ran it up, right? You got a 187 all the way up to our level at 190.57. So that would have been a $3.50 move, or about $150 on a single contract if you were trading the 5-minute chart, right? And then after that, we get our correction and we start to see a move up. There's no real displacement here, and we see a double market structure shift here, and we get another fair value gap. We never get a really true return to there, so it doesn't look like on the 5-minute chart there was necessarily an entry at that point. And then if you're a scalper and you're a day trader and you're trading the 1-minute chart, much like I do, much like a lot of the people who are following along, it was a little bit of a wild ride in the beginning, just like Tesla is in true form. If you're watching 1 minute instead of 5-minute, the deliver on liquidity and the liquidity swipes and sweeps are more aggressive and very confusing looking on the 1-minute chart. But ultimately what we see is we see market open, we get a change of character, right? But we instantly get a bullish displacement candle that ends up being more or less engulfing and closes out this fair value gap. So that trade is off the table. I was just watching at this point. I saw price come down. You could have grabbed a quick scalp, although it was It didn't end up paying out huge. I did not take this trade, but you get a fair value gap, right? We've already delivered on buy side, come down, right? Fair value gap, change of character, return to fair value gap, target previous low, good for a little scalp, 185 down to 184. So dollar move on the price, but still good for a scalp. Right, then this is the trade I took. I did not follow the elements of a trade setup specifically, but what I saw us deliver down to sell side. I saw this little fair value gap here, sniper entry. I took the return to the fair value gap with the stop loss below the low, right? We get one candle in, displacement out. There's the perfect sniper entry. If you didn't grab it, there's a second fair value gap right here, and we get the return to, and you have your pick of entry, beginning, consequent encroachment, almost all the way down to the full fair value gap fill. Nice entry there, right? Run it back on an old high. Let's say you grab consequent encroachment of 184. We'll just call it 184.50, and all the way up to 186. So $1.50 move, right? $75 or so on a single contract. But if you ran it on other previous highs, right, you could have run it up to 186.88, and then you could have potentially targeted the full move to 190.59 if you were willing to let it play out. You could have also been using your Fibonacci levels for optimal trade entry. And let's reverse that so you guys can see it right. We get a return to optimal trade entry here from fib level swing high or swing low to swing high, return to optimal trade entry. Where are we going to target? We're going to potentially target our different take profit levels, right? Back at 0, ends up being the scalp. Take profit 1 or take profit 2, take profit 3, hits full symmetrical swing of 188. That was the high I was calling for. I didn't necessarily think we were going to get all the way to the 190.58, and we hit it and exceeded it. So even if you just took the symmetrical swing, you had a nice trade from 184.50 to 188.50. Nice $4 move, $200 on a single contract or so. So there's our smart money concepts entries in the time frame we're looking at, based on the elements of a trade setup using ICT smart money concepts. There was lots of other trade opportunities in there. If you were patient and you were willing to wait for a setup, there was also a fair value gap here that we got entry in, right? That was probably about the same place as our 5-minute fair value gap, but it was also present on a 1-minute chart. Then if you wait for the lunchtime range and you're looking for continuation, then there was a, not any incredible entries here, but you did get this low change of character here. There was a small fair value gap here, right? And then we'd be targeting again buy side liquidity, which you could have targeted one of many depending on how you wanted to run the trade. If you were looking for continuation, right? We end up hitting all of these buy side targets, and it could have been a good trade. But I don't like to trade the afternoon sessions. Really like the morning sessions. That's why I try to focus on the day traders who are following my videos and following my setups. So we're really looking to enter the trade before 11 o'clock during the AM session. Really looking for that run on liquidity, market structure shift, fair value gap, targeting previous highs or fib levels on the extension. All right, so hopefully that has been helpful for you guys. Appreciate all the support. Again, don't forget to smash a like, subscribe, share with all your friends. Looking forward to seeing some of you guys on the Discord. Don't forget to take advantage of the 30-day free by using code ONLY10. I think there's only 3 of those 10 codes available still. You can log on to the Discord and find the upgrade links on the Discord. So again, thanks for the support. We'll see you guys on the next one.